Hey guys.
What?
Nothing.
What happened?
Hey, hey, hey. How are you? Hope you guys are having a happy Wednesday. Happy hump day. We're going to get started in about a minute. Oh, my computer is acting wacky. Hey girl, hey. Welcome. Give the baby some kisses for me. Hey girl, hey. Hey guys. Welcome, welcome, welcome. Yes, it is Real Estate Wednesday. And today we are talking settlements. Hey, how are you? How is everything? We haven't talked in so long since BTS. What's new and exciting? Any real estate deals going? If you have any like off-market deals, definitely shoot them in my DMs. Awesome. I'm glad everything's good. So we're going to go ahead and get started. Today we are talking settlements. I just had a settlement the other day. I have a client that I've been working with for a while. She just purchased another investment property. And I had the help of the amazing Loretta Walker. She's a realtor in my office that I work with. She's pretty dope. She helps me with my buyers. Because as some of you or may not know, I'm licensed in Georgia and Pennsylvania. So when I have my Philly deals that I need assistance with, Loretta always hops in and provides exceptional customer service. So, so we had a settlement, and our client bought a single family home for a rental in West Philly. She's going to do a little bit of work to it and then put a tenant in there within like the next 2 months. So what is a settlement? A settlement is literally the end of the home buying process. The buyer comes, the seller comes, the agents come, the lender comes, the title company comes. So sometimes the lender actually doesn't come and just send the information to the title company and they close the deal. Other times they do show up. In this particular case, this week, the lender did come to, hey girl, the lender did come to settlement. So you would come as a buyer, you would sit down and go over all your lender docs if it's a loan or mortgage situation. So you go over like the note, which is your promise to pay. You'll go over the mortgage, you'll go over the disclosures, the information that you submitted for lending. If it's a cash deal, you're pretty much just signing the closing documents, and that is all. Cash deals, literally, I think I've done a cash deal settlement in about like 25-30 minutes, because you're literally only coming in and just signing away. The seller comes in and signs disclosures and tax documents. We exchange keys, and that's really the end of the process. It's a transfer of ownership, so that is where the information is transferred from the seller to the buyer. You get a copy as a buyer, you do get a copy of the deed, but it's not the recorded deed. So about 5 to 6 weeks after settlement is when you actually get the recorded deed. Not only do you get the recorded deed, but you get your title insurance information, and you always want to make sure you hold on to that. If you get the paper copy, send it to yourself electronically, so you'll always need it. The deed will be needed. For example, I added my house as Airbnb in Philly. They have new Airbnb laws, so they needed a copy of my deed. So I kept sending them the deed that they gave me at the settlement table, but it wasn't the recorded deed, and I couldn't find the recorded deed. So I had to go to the title company from 6 years ago, and they had my deed on file. They sent me my deed. I sent it to the city, and the city issued my limited lodging license. So that's, the deed is super, super important. Your title information is also important, because if you get into a situation where you're selling the property and something comes up, like maybe, let's say you bought the property in 2021, and then you're trying to sell it this year, but then there's a lien or a judgment that comes up from 1995 or something like that, previous to when you bought it. Your title insurance covers you, because what they do is they check and make sure that there aren't any liens or judgments or outstanding mortgages. They make sure they check to make sure the transfer of ownership of the property happened properly, so they're able to kind of like cover you. If it is something that they can cover, they'll give you a letter of indemnity, and then you would give that to the title company, and that would clear you. So that's why title insurance is important. But after settlement, you get your deed and your title insurance documents a couple weeks after from the title company. They will mail it to the mailing address that they have on file. So that's another thing you want to make sure happens at settlement, that your mailing address is correct. For my client this week, she got an investment property, so we had to make sure that her mailing address is correct. So when they start mailing her information, it'll come to her actual home or her business address as opposed to the address of the property. That's super important, because if they're sending important documents to the property address as opposed to your personal address, you might miss something. I know when we bought the duplex a couple years ago, we never got a water bill. So we didn't pay the water bill. So by the time we got the water bill, because they were sending it directly to the property, it was like $600. And that was just like ridiculous. So you always make sure, if it's an investment property, that your mailing address is correct so that you can receive everything that you need. If the property is your primary address, that's fine. That'll be your address on file. Yes, title insurance is separate from homeowners insurance. So homeowners insurance is the insurance that covers the house. So if you get robbed, if the house burns down, if a tree falls on a house, if there's hail damage, things like that, that will cover you so that you can get the house fixed, or they can give you monies to move, as long as you have the proper coverage, which is another thing that we need to really start working on, is making sure that we have the proper coverage for the homes, especially in Philly with the property values increasing. I know I had to recently reach out to my homeowner insurance to make sure I'm still covered for the adequate amount, because the value of my house when I bought it is not the value of the house now. My house is actually increasing by $100,000, so I had to also increase my coverages to cover that. Title insurance, just make sure that the transfer of ownership happens properly and that you're covered in the event of any liens or judgments, or if someone wants to claim ownership to the property later on down the line. So that's the difference. Two completely separate things. Another insurance is mortgage insurance, which covers the lender in the event that you default. There's also a type of mortgage insurance that covers you if, God forbid, you pass away. It actually pays your mortgage off as well. One of my close friends' parents passed away, and the mortgage insurance is paying the outstanding balance. So now they're going to have a property that is free and clear of a mortgage. So that is the process. Settlements can go easy and really smooth, and then there can be like some hiccups. Yes, mortgage insurance is very important. And in regards to FHA, you actually have mortgage insurance for the life of the loan. Whereas with a conventional mortgage, you have to have mortgage if you put down less than 20%. There are some lenders who are giving out mortgages if you're putting down less than 20% with no PMI, which is private mortgage insurance. But that's lender specific. So yeah, there's a bunch of different kinds of insurances when it comes to real estate. But moving on, what's happening at settlement. So I've had easy peasy settlements where everything went right. All the conditions were cleared. We get to settlement. We sign docs. I give my buyer their gift and we go on our merry way. I've had settlements that have had to get delayed because of issues. Like my settlement when I was buying my house was delayed by 10 days because old girl did something and my credit limit on one of my cards increased. So I had to pay off a specific amount, wait for it to report to the credit bureau, and then my mortgage lender was able to clear it, and I got the clear to close. I had a lender call me one time for one of my buyers who was buying a duplex in the Northeast and told me that he opened a Best Buy credit card. It was like 2 weeks before settlement. He opened a Best Buy credit card, had a balance on that credit card that needed to be paid that changed all the numbers, and we were not going to be able to close until he paid it off. So, of course, I called him ever so nicely and let him have it because I have the conversation with my clients in the beginning, my buyers who are using a mortgage or some type of lending. You cannot do anything with your credit until we are done. You cannot open up a credit card. You cannot go buy a car. You cannot buy furniture. You cannot get a line of credit. You cannot do anything credit related until we are done the process. But for him, they were giving him no interest for like a year. So it was a great opportunity and he knew he had good credit. So he knew he would get approved. So he bought something. He ended up paying it off and submitted the documents to the lender. They were able to run some desktop profile that they had, and we did not have to shift closing because it was all cleared. The credit card company actually reported a day or two later that it was paid, and then we were good to go. I've actually had a situation where I was representing the seller, and this is a different situation, but I was representing the seller and the buyer just did not show up. They were an investment company, and I guess after they ran their numbers, it didn't fit what they were looking for, or it didn't fit their guidelines of what they were buying. So we got to settlement. They didn't say anything until the day of settlement. And their logic was, they said that there was structural damage at the property. Mind you, they did an inspection, their own inspection. Even though they waived the inspection, they still did one for informational purposes. They had someone come out to assess the property for its value, and still, went forward. They put their deposit down, went through the whole process, ran title, did all of that good stuff, and just didn't show up. So, of course, my seller was extremely upset because she was using those funds to buy a property in Florida. And yeah, so they just didn't show up. So in an instance where the buyers don't show up, they forfeit their deposit. Well, in a sense, they forfeit their deposit. You cannot back out of a deal and get your deposit back unless you have some contingencies in place. And they waived all contingencies and just didn't show up. So the seller and my brokerage ended up getting the deposit, which calmed her down a little bit. But she was still upset because she was expecting a large sum of money and she just got a few $1,000s. But what's great in having relationships with other investors and other agents is I was actually able to get the property back under contract about 2 to 3 days later, and we closed within 14 days because we already ran title. Every title was clear, everything was good to go, and the mortgage company, the investment company was buying cash, so they were able to close that so soon. So settlements can depend. They can be easy peasy and really smooth. They can be super rocky. You can get to the settlement table and find out that you owe more than you were expecting. Or as a seller, you can get to the settlement table and find out that there's a lien or judgment that was not satisfied. I had a deal not too long ago where we got title insurance, and we were almost clear. Well, we were clear to close, and then we got something from the city stating that So I represented the seller. I had represented him when he bought the house, so he reached out to me and said that he wanted to sell the house. So the previous owner had a judgment against them and the property for doing work without licensing and permits. So somehow, some way, it was missed in the process when we were buying it. So because it was missed, my seller now was on the hook for that. We ended up working it out where we drafted up a document saying that the new buyers would take care of the issue, and we gave them a little bit of extra money at the table to take care of it. And yeah, so settlement can be absolutely insane. I've heard of getting to the settlement table and there's like a $10,000 gas lien on a property because, hey Blanche, hey guys, there were $10,000 on a property because it was an investment property, and as people were leaving the property, the landlord didn't have what's called the landlord cooperation agreement with PGW, and the gas actually stayed as a lien on a property as opposed to traveling with the tenant. So he had years of gas liens on his property that he had to satisfy in order to sell it, and it didn't matter if that deal died. It was going to have to be paid regardless. So yeah, so that is settlement. Does anybody have any questions? When would you owe more than you were expecting? That's an issue if maybe like your down payment or closing costs wasn't properly calculated. If you have a good lender, I recommend CA. She's with Huntington Valley Bank. Her numbers is her numbers. You'll end up owing less before you ever owe more at the table. But that's something that you would find out like the day of or the day before, depending on your loan, because you have a 3-day right to rescission if you have a loan, FHA or conventional loan. So you would know at least 3 days before closing what your actual final amount to bring to the table will be. CA is the best. CA is absolutely the best. She was my lender when I bought my home back in 2016. And then when I got my real estate license the following year, I found out, the reason why I chose the company that I went to, Integrity Real Estate Services, Blanche is with Integrity. One of the reasons why I chose them was because that they use CA. And when I say CA is the bomb.com, she crossed all her T's, dot all her I's. Like, if she says that you can buy, you can buy. And the only person that can mess that up is you. By either opening up a credit card, getting that line of credit, or doing all those crazy things that I mentioned earlier before getting to the table. But she is the best. Like I said, I personally used her when I bought my home in Philly. And I want to say about 90% of my clients use her as well. Another settlement story. So I had a client who I recommended to go use CA. Oh, thank you, Blanche. I had a client who I did recommend to use CA, and they didn't use CA. They decided to go with somebody else, and CA had told them that they were not in a position to buy, but they went to another mortgage broker and they were told that they could buy. And we did our inspection, we did our settlement, appraisal, we did all the things. We got to settlement. And the title company is like, the lender had not yet wired the money to the title company. So they were waiting on the lender to wire the money. I mean, we did everything. We signed paperwork because the buyer had to go to work. The buyer came in, the buyer signed all their paperwork. I gave the buyer their buyer gift. We went our separate ways. And about an hour or two after that, the title company called and said that the lender was not funding the deal. And, so he was not going to be buying that house. Mind you, he had put in his notice to move at his apartment. It was a mess. It was an absolute mess. I don't even know how we got to clear the clothes on that one. It was a mess. But long story short, about 6 months later, he went back to CA, got him approved. He actually got approved for more than he was approved previously because he did the step-by-steps that CA told him to do. And we closed on a house, a bigger house, actually 6 months later. No, it was like 9 months later. We closed on a house, a bigger house. And that closing was super smooth. We used the same title company, of course. We had jokes and laughed about it afterwards. But yeah, settlements can be super, super easy peasy. Come and sign the docs and go about your business. Or they can be super, super crazy and deals die at the table. I do my best. Me and my team, we do our best to make sure that deals do not die at the table. Deals don't die unless we do. That's what Blanche taught me. And honestly, I've been an agent for 5 years. In 5 years, I've only had 2 deals die. The one that I told you to buy didn't show up, the investment company, and that one I just told you about that died. But we got him a house. We got him another house. So does that really consider dying? I don't know. Maybe. But does anybody have any questions? Any questions for me? Blanche and I, we worked together for about 3-4 years. Boy, do we got real estate stories. Like, those real estate shows that they have on TV, they're not real. They're not real. There's so much more that goes into it. They don't show you when people are doing all types of craziness and having to deal with crazy agents and crazy clients, and there's so much more to real estate. There's so much more to real estate than they put on the TV. I lied to you not. I want to quit at least like 3-4 times a year, but then my clients make me realize why I don't. I always have to remember why I got started, and that was just to be able to bring the information to people who think that they can't buy. You can buy real estate. You absolutely can buy real estate if you have a team behind you and you plan things out strategically. You can definitely get to the table. That's why I can't watch you. I can watch you, but not those fake shows. Can you change anything at settlement? What do you mean? What are you change something as in what? The address that you're sending your mail to? Definitely. Yeah, I think that's about it. The settlement statement is drawn up ahead of time, so like those numbers can't really be fudged at the table. It would have to go back to the lender, and that would delay settlement. Settlement is settlement. I love Blanche's those fake shows. I'm trying to tell you, I think I watched those Sunsets, like 1 or 2 episodes, and I just couldn't get into it because they need to show the nitty gritty, the real life of a real estate agent. Because baby, You get some pictures of properties and it looks in pristine condition, and you walk into a horrible house, falling apart, all types of stuff all over the place, having to cover your nose because you can't even smell or can't take the smell. But no, you can't really change anything at settlement on the sheet. You gotta send it back. Any other questions? Any other questions? Going once, going twice. Well, thank you guys for joining me on another episode of Real Estate Wednesdays. We are here each and every Wednesday at 6 p.m. where we do a deep dive of our real estate minute, or Monday minute, that's dropped on Mondays. If you guys have anything that you want to know about, or if want us to discuss, feel free to drop them in the comments, shoot them over to my DMs. If you have my number, shoot me a text. I do this for you guys. I do this for those who need more information on real estate. Yeah, I do it for you. So let me know what you guys want to talk about in the future, and I'll make sure to add it to the list of topics. I hope you guys have a happy hump day. Stay dry in Philly. And I'll talk to you guys soon. Love you all. Bye.